All right, so we covered some basic part of the entry earlier. We talked about the MSU into the talked about EFG setup and EFG entries, like we mentioned in the bootcamp. Then we covered MSU, and then we said you can have MSU into your zone or an MSU away from your area. So any MSU into your zone, usually a telltale sign that price is about to change, right? Maybe you were bullish before, but telltale sign that oh, there's going to be some buys coming up. When you have an MSU into your area, you can also have an MSU away from your area. Okay. And this idea about MSU is to never forget that MSU is not a lower time frame dependent entry. Okay. MSU can happen on any time frame, it can happen on the daily. We saw examples when it happened on the daily. For example, this day, this one right here, so an MSU. Then it was very obvious on the daily time frame. All right. This here is an MSU, right? So press to the lower air to the eye, right? This is an MSU, okay? Came back, tapped, and then sold off. All right, so MSU can happen on any time frame, regardless of the the time frame. So we also spoke about QM entries, and I mentioned now that there are different types of QM entries. There's the common one, the popular where we have these price drops, and here you have a move, right? A small move just at the same point with the left shoulder as the price breaks, and then just right here, sorry, sorry, I'm injured. So the price come back to this area and then continues. So these are classic QM, the common head and shoulder pattern, or QM, like you call it, so head and shoulders, or HNS levels, like you call it in SNR word. Okay. And then there are other ones. For example, you can also have examples where you have double supports before the shoulder or before the peak. For example, you can have something like this. For example, this two supports, then price comes the peak. And then you still have your shadow stuff here. So price breaks, comes back, and progress. And the reason why I'm not focusing on all the other types of QM is that the explanation of the original QM can help you understand what's going on, right? The explanation of the original QM helps you understand what's going on. So we're not just going to be cramming the patterns. We want to be able to form a narrative behind what is price doing? Okay, price is rejecting off this level. Price has formed this new level, and this is where price wants to trade from now. Okay. And it's a very interesting concept. So it's very interesting to be able to get all of these entries. Now, another example of the entries we spoke about are the flipped and the flipped engulfing. Okay, we spoke about flipped engulfing, and I gave an example. Okay, and sorry. So we can for the flipped engulfing, I'll just explain a little bit again. So you can have something like this, price has been trending all the way up, then you price tap this level and then makes a short high. Now this new high that price makes does not break, right? It did not break. So eventually breaks this level, right? And you have a retracement back, right? Breaks. So whenever price comes back, what do you want to do? You want to continue selling. So you have want to continue selling from this flipped level, okay? Taps and then you continue selling. So that's the idea behind the flipped engulfing. So the last entry, which I've not talked about, are the can entries. They're called can entries because they literally look like a can, and they happen on every time frame. Can happen on any time frame whatsoever. All right. But the thing about can entries is that you cannot trade them alone. For example, if you see a can entry on M30, you must be sure that there is something else elsewhere on another time frame, probably H1, H4 daily, that supports that trade. For example, I'm going to take this out. So this is an example of a can entry. Can entry is where you just see multiple rejection. This is a can entry, right? See all these setups, see all the candles, they look like a can. That's why it's called a can entry. So eventually you get the breakout, and then when price retraces to that level, just right here, you get a trade, okay? How many pips? Like 50 pips, decent pips. So if you want to take this kind of entry, you want to look for higher time frame corroboration. So in this case, let's see what's on each one. I've forgotten where it is now. All right. Okay. So in each one, we have classic scenario level, Obviously, you are this guy, and then you're breaking up. You have a breakout right there. So let's see anything on the H4. Not too much on the H4, apart from the fact that we're just rejecting from this guy. Okay, so can entry. So whatever entry time frame or whatever entry setup you want to see, you must be able to corroborate it with another time frame setup. So this is an example. This is a can entry. There was also a can entry yesterday when price closed. Let's see on M15 M5. So this is another example of a can entry, right? See the candles right there. It's usually just rejection candles. So price comes to that level, and then when you check higher time frames, you see, for example, on M15, this a classic SNR level. Same thing with M30, right? I remember what we say about levels that share the same level. From the bootcamp, we mentioned out that when two levels on different time, on one level is the same on different time frame, it's usually a sign that that level is a valid place to trade from. So we have our can entry, we have 15 minutes SNR, classic SNR, M30 classic SNR, and then really nothing on the H1, but enough to actually put us in the way to get this guy on a buy position. So we bought all the way over 100 pips, and that was like 5 risk to reward, five. Okay, so can entries they always happen. Okay, so this is another example. These are they're just candles that look like a can when you put them together. That's literally what is called can entry. So that's what we call can entries. Looking for other examples. There are things you come in contact with day in, day out. Like a trader. Okay, looking for one more, so would be even, right? One more example. Okay, so right here, it's kind of like, but I don't think price can see it yet. Okay, let's see. All right, something like this. See, there's a can entries, right? One, two, three, four. Gathered together in one single spot. God knows what they are doing. I have no idea. So those are kind of interesting. Price breaks out. So it means if you want to take this trade, there must be an higher time frame corroboration. For example, let's see what do we have on the higher time frame right here. Uh, let's see H4, M30 to H4. Let's see. Yeah, so on the H4, you have this engulfing, which is pretty much a strong level. Why is it a strong level? To liquidity, structure, and reacting off of this point. So let's see H1. There's a corroboration on the H1. Okay. So on the H1, it's pretty much the same story. What do we have? We just have breakouts right here. Price is reacting from this jungle. Complete mitigation right here. Price comes both breakout and breakout structure, right? Breakout structure. That's the level to continue order flow. Okay. And on M30, this was where you saw the setup. This was where you saw the entry. You just went higher to look for confirmation. Okay. So M30 can entry, then confirmed on higher time frame, which of course you have to be able to follow the storyline to be able to know how far or how well you want to hold it straight. So that's pretty much about entries. So the EFG setup, the MSU, either the MSU is into your area or is away from your level. Okay. And then the can entries, then the fleet engulfing entries. All right, for your exits, when we enter trades, where do we desire to take or exit the position? So it's usually good that before you take a trade, you know the level where you want to exit that trade before you actually enter the trade. So where are the levels we want to exit trades? Number one is we want to exit trades at structural liquidity levels. That means the last low before the main low or the last high for the main high. We also want to exit trades at classic SNL levels. or the next high, the next low, or the next strong H4 daily level. So it means that when you take a trade, based on higher time frame narrative, you also want to go to the higher time frame to see how far, where is the strongest level in this trade that I'm taking that can make me close this position and probably open a counter position, right? So for example, let's say, let me take all of this off. So just me back testing. Let's take it off for painting. So let's say for example, let's take this trade for example. Okay. So we have this level, this HNS level, right? The price is reacting off of this HNS level. I'm taking this trade, this sell right here. Price starts the H4 level again. I want to do the simple things. You want to confirm that trade by asking two questions. Is there an MSU into that area, or is there an M30 engulfing that formed when price started? So let's see, is there an MSU into the area? You have to now understand structure. So let's see, price came, tap this I, and then take the low, take the I, induce the I again. So we have an MSU into the area, and then we have an M30 engulfing. Now pricing comes back to our M30 engulfing. So it means the next thing we are concerned about is there an M30 engulfing fill that we can trade from? So we see the first M30 engulfing fill right here. The price came back to that level, good trade, you stop above this I. Next one, M30 engulfing fill, good trade, you stop above the engulfing fill. Okay, so what will be your targets? Your targets comes from the question, where are the strongest level within all this range? Because if you're going to sell, you're selling back down, all the way down. So where's the strongest level within all this range that price is likely going to react from? Good question, right? So one of the very good levels that you'd want to consider first would be this level, right? This one right here. Why? Because this is an MSU. Price takes the high, takes the low. So if you take a trade from somewhere around here, anywhere around here, the first place to take your first TP is this level. I'm saying this because in hindsight, it's easy to just say, oh, the first place to take your TP is down here because we can see what has happened in the market. But you're not seeing what has happened in the market when the market starts, when you're trading in a live market. So you want to take profit, the first place, you again, don't forget, you're thinking about the strongest level in the opposing trend where price can reject from. So like I mentioned, your MSU setup is one of the strong levels that price can adjust from. So if you're going to take profit, this will be your first level to take profit. And that's why when price came to that level, so we still saw a bit of rejection. So the price rejected a little before the sales continue. Now, where will be the next level? Again, understanding of structure, very, very important. See, price takes this I, and then we have this I also taking, we have this I taking. So right here, right at this low, price induced this guy. So we took the I, took the low, and then we left all these guys unmitigated. Okay. All these guys were unmitigated. So if I have something like this, so right at this point, my first TP will be here. My second TP would be here. Why? Because this is unmitigated. All these levels are unmitigated. So what happens when price tap? What do you see? You see short buy, very, very short buy. And then although the sales continued. So if you're going to determine your TP in order of hierarchy, it's going to be like you're going to have your first take profit right here, first TP right there, because this is the first strongest level. The second TP is going to be right here because this is the next level, unmitigated. You have just liquidity underneath all those areas. So the next place, again, let's just focus on our structural levels. Let's see this level. Is this place strong enough? Yes, this is the next strong enough level. Okay. The next strong level that is enough to push price. Okay. So what happens? Price came to the level, so a little bit of rejection. We are happy that, oh, we saw rejection. So we want to confirm the rejection. Again, we're seeing a rejection. How do we confirm the rejection? Now, the first question is an MSU into this area. Now, on this time frame, literally there's no MSU. You can't see any MSU. The next thing we can see is if we can get a flipped engulfing to actually trade the buys from. So from M30, the best time frame to go to is M5, which would have done on any of these time frames, right? On any of these zones. But I'm more interested in this zone because I have the benefit of hindsight because we can see what has happened already. Okay, so on M5, what am I looking for? I'm looking for a flip zone, a flipped engulfing to actually trade from. So again, structure is important. So we have this low, we have this low, then we have this low. All the way, this guy came all the way, came to this engulfing. We came to the engulfing and then we rejected, right? Our first rejection, but we did not break this last low. So after that rejection, what happened? We broke this high. So where would our continuation be from? It's going to be from anywhere from here to here. That is the strongest. And by benefit, we have this level. So between here to here, where's the strongest level price can retrace from? Okay, we have this one first, because this guy took liquidity, broke structure. This guy right here. So but price broke it conveniently. And the next level was this level right here, right? Price tap into that level and then price continue. Okay, there are more ways to have confirmed this by, especially with engulfing, right? So right here you have take the eye, price comes all the way. Again, which level is strongest within this from here to here that is enough to push price higher? These are questions we want to ask. So we have our funny candles all around in this zone, and then we have this big engulfing, which counts, right? This is an engulfing. So entry here. So what will be our target? The next question. By asking for targets, where is the strongest level in this cell that is enough that can do the work of pushing price lower? Okay, so right here we have MSU here, we have take the high, we have price take the low, price broke out right here. This guy came but did not completely mitigate, so we have a lot of stuff. So one of your first targets is going to, for the buys, be this level, right? Because this did not completely mitigate, so we still have this level. This guy, this engulfing is still very fresh. Price has not tapped. This classic SNR level is still very fresh. Price has not tapped. Okay, so if I'm going to be buying from here, that would be my first target, right? So exits are also as well as very much important as entries. The price taps, takes this eye out, you're already in profits, you're probably in break even. Take your trade to break even. Now, you know this is an MSU setup. So what happens? Knowing that it's an MSU does not mean you would perfectly be able to take trades the way you want. Okay, so what happens next? Price comes, price takes you out of break even, but you've taken partials from your BE trade, right? And when price takes you out of break even, again, you see solid rejection. This is rejection, telling you that, oh, okay, this is likely an inducement and price still want to go higher. So the only thing you need to do is find confirmation. Is there an MSU away or is there an MSU within this level? So you see MSU price takes the high right here and then comes to take the low right here. And you can wait for breakout or engulfing to take this trade right here, because this also gives an MSU price, takes the high, takes the low. Okay, MSU is always the defining factor. So you can take the buy right there, and then what will be your next target? You're not targeting too far. The question is which area is strong enough level. So we still have this classic SNR untapped. I'm using the line now because my pencil did not. So this becomes a very good trade to have taken at this point. What will be my target? This level, right? Why is that level my target? Because it's going to be my first target. It's not probably my overall target. So we have this level unmarked, and we have this, like I mentioned, unmarked also. So we just have those two levels unmarked. And when price tap this level, the question is, do I have an MSU into that level? Okay, so I start to focus on the structure from the next. So this was the previous high, right? And then we form this new low, right? And what happens? Price takes the low right there. So okay, the next thing I'm expecting, oh, price should take the high. Immediately price takes the high. What happens? Give an engulfing. Okay. On the final engulfing, I'm still asking myself questions. Is this a sell to take? I've seen M5 engulfing form right there. We are coming back to it. In fact, he has even given me an MSU away from the trade. Okay. But do I still want to take that trade? You need more reasons. So I can decide to go to the higher time frame to find more reasons to take the trade, which is probably the most important at this point. So let's see M15. M15, no, really nothing. Let's see M13. Okay, M30, we can see M30 engulfing, right? M30 engulfing, very decent engulfing. And let's see if price came back to this M30 engulfing field level. Not so much, or you could have probably entertained the sell. Now, if you take this sell, again, where is the next strong low? Where is the level you want to take the sell to? If you're going to take the sell, now, this guy gave you an MSU. This was the last MSU low. It means that whatever is going to happen to price, is actually going to take this low back. Okay. So if you sold anywhere around here, this is going to be one of your areas to actually take your first profit from. Okay. Take your first profit from this area, and then we are probably on break even. Okay. And then price gives MSU again. See, price takes the low right here first, then takes the high. At this point, you're probably expecting monsters, but what happens? Price pushes all the way up and still come back to the next level. So it's an interesting thing, right? And by pushing down all the way up, this gives us a better view, a better opinion of the market. So we can frame our buyers more clearly. So this will be our fake brick of structure. This will now be the new inducement, right? So you want to be happy to take this trade. If you get an engulfing on M5 here, you take the sell, and this low becomes your first target, your first TP. Why? Because this is now a confirmed sell setup, right? Because you have your decent FUS, your engulfing, sorry, your inducement. So first TP will be this low, the low of this guy. Next TP is going to be the last low before the main low, which is this guy. This guy is here, right? Will be your next TP. Your final TP is going to be this new low. We want this price to take this guy out. So first TP, second TP, and that's how we just frame our exits. Okay. So if I decide to go back to the higher time frame, or let's see another. So that's the anatomy of taking this trade from somewhere around here to here. Now, because I can say, oh, let's take this trade, and then we take this trade, and then I just put an entry here and put my exits at this low. But I'll be wrong that way. Why? Because I'm using the benefit of hindsight to determine what is really going on with the trades. But by we the way we have structured the exits is that you want to exit the trade at important levels, structural liquidity, classic SNL levels. You want to exit the trade at the next high or low levels or the next strong level, depending on the time frame you have, maybe H4 daily, or depending on the lower time frame level you're entertaining at the point, which is what we've seen. So let's just see another trade. Let's see if you can demonstrate another trade, the entry and then the exit. So let's see. Right. Let's take this lens as an example, this guy. So we have the benefit of hindsight, obviously. So I'm going to sorry. So yeah. All right, so on this level, I want to take a trade, right? Again, for the sake of this stuff, we have the benefit of hindsight. So one of the things that you'd see from here is, first of all, you see the flipped engulfing that we've been talking about. Now we have this level, which is our imbalance level, like I mentioned, the funny candles, the price taps that level, then you expect that price will break this high, but break this low, but that break did not happen. So rather, what you have is the price eventually broke this level. Okay, it gave you an MSU, right? Take the low, take the high. So where do you want to take this trade from? Anywhere that is strong between here and here, right? So price comes, another funny candle right here, right? Even though we still have unmitigated areas on this level, okay? But price taps this level. Why do you want to take this trade? This is an H1, currently on the H1. So we have our fleet engulfing, right? And then price comes, takes the high, takes the low. You want to take this trade here. This H1. If you go to M15, you want to ask yourself two questions. Is there an MSU into this level or an MSU away from it? Obviously, we got an MSU into the level. Price takes the high, takes the low, taps the level. Okay. And by tapping the level, what do you expect? Two things. You expect to either see engulfing trade from the engulfing that forms, or from the engulfing field that forms, or from any of the narrative that we've given about price. So the next question I'm going to ask myself is, oh, what do I actually see? So right now, if I'm going to explain this in one of the ways, using the flipped engulfing entry that I mentioned, to see price takes this low right here, we already know that we want to buy from here, obviously. So this is an inducement. So the next thing is, oh, what's going to happen? The price comes to this level and then rejects price. But rather than price coming all the way to take this low now, price did not. Price broke out. So where is the level most favorite for price to continue the trade from? This flipped engulfing, right? I've explained this I explained this in the morning. And plus that flipped engulfing, what else do we have as a conference? Price came to this level, so it gave us take the high, price takes the low. Okay. So if I'm going to buy here, the next good question is, where would my exit be? Where would my exit be? where do I want to exit this trade? Don't forget, we mentioned a lot of places where you can exit this trade. And the idea is, okay, where is the next strong level that I want to be taking this trade on? Number one, these levels right here, they're just build up of liquidity. There's no unmitigation within them, right? No unmitigation between them. The only place that is unmitigated is this guy here, right here. So if you're taking this buy, your first take profit will be here, right? First take profit will be here. Then when price gets here, you want to be your trade, you want to take your TP1. The next target will be this high, this extreme high. And then you continue to ask yourself the question, where again is the strongest level within this range that is strong enough to reject price? Now, on the flip side, we have this level, we have this level. Price reacted of this flip engulfing. Again, this is also a flip engulfing that continued to sell to the low price. Now we have this engulfing here completely unmitigated, right? This guy here is completely unmitigated. So what happens? Price taps that level. I'm still holding my buys are on BE now. I've taken TP1, my TP2, my TP3. Okay. So price comes to this level. You know, this is M15. So if you're an intraday trader, the likelihood of you leaving price to come here and come all the way without you engaging this sell is probably very, very low. So when price taps this level, is a level you marked, a level you've been anticipating that price will tap. So you start to ask yourself the question, you can't go to the M1, even though we saw this strike on the M15. So the next question, you're on M15, the next question you want to ask yourself, is there an MSU into this level or an MSU away from it? Okay, an MSU into or an MSU away, or after price taps, is there an M5 engulfing or an M5 engulfing field that you can trade from? And everything checks out with this setup. So you see there's no MSU into, but depending on when you see the price give an MSU away from the market. So MSU away, this is a pretty strong level. Remember when we talked about strong structure, the liquidity broke structure. Do you want to take this sell? Yes, you'll be more than willing to take this sell. Why? You have additional confluence. Price came all the way, right? See, if you want to enter this trade here, came all the way, see price. So take the I right there. The low of this candle is this candle. So price takes the low, takes the I. That's an important MACD setup. So you want to take this sell here and you want to ask yourself the next descent question. Your Excel is going to be at both the I of this level. So your next descent question is, oh, I'm taking this sell here. Where is the next strong level that is so powerful that can reject price? Now I'm taking this sell here. My first target is likely the low of this MSU because they're surely going to break that low, right? So low of this MSU, my first target, this N3R. Then I'm asking myself the next question: where is the next level that's so important to break price? So again, we have to pay attention to the instinct of structure. So right here we have price take the high, take the low. So everything from here, from within here to this level, they are strong levels. They are levels that price can use to continue price. Okay, so we have this I right there. Sorry guys. So we have this I and this low, which is a strong this that means from year to year we have strong levels. Why? Because the level they took liquidity and then broke structure, and at the same time is an MSU, right? They took the I here, took the low. Okay. So right here we have this I form, this new I form. And from this I, one of the very important places, there's mitigation on and on from here. So one of the very important places you probably expecting price to come to is this level. But right now, as you can see, this is we looking at markets in life in hindsight. So if you've taken profits here, for me, decently, the next place to reasonably think about the next trade is this level. Okay, but we didn't get that. Okay, so price bounced off of this coast. So the next question I'm asking myself is what is within this guy that was strong enough to reject price here? Because right here, what we have is our can entry, right? These are can candles, right? So these are can candles. So what is within this level that is strong enough to have rejected price right here? What do I see? Now within this level, so we took this I right here, we retraced, and when we retraced, we came into this double engulfing setup. Double engulfing setup came and then gave us this HNS level, right? This is an HNS level, right? Here the price is reacting from. So this guy, this low right here took out this guy, right, and book this guy. Okay, so that's a strong level. Probably that's why prices rejecting from the HNS level. From the HNS level, we see reactions, strong reactions. Okay. Next thing you want to ask yourself, is there an MSU into this level or an MSU away from it? Or is there an engulfing fill you can trade from, M5 engulfing fill, and M5 engulfing you want to take the trade from? So one of the very good places to take this trade from this engulfing, but price never came back. So the next place you want to consider is the engulfing fill, right? Sorry. Next place you want to consider is the engulfing fill. Now, please pay attention again as I explain the flipped engulfing because it happened again here. So we have this engulfing, right? And from this engulfing, price taps, and then you expect price to come and take this low, right? But that did not happen. Rather, what happens? We broke. Oh, Siri. No, no, Siri. Okay, so fuel engulfing price tapped this level, rejected, but did not break this level. So what do we see? We broke the engulfing high instead. So we have engulfing fill now to trade from. All right. So, and at the same time, we have our flipped engulfing right here to trade from. Okay, this level. This is the flipped engulfing to trade from. So price comes all the way. Super patient, you still have to wait, right? You have to wait for price to do its thing. Okay, super patient, you price came. Now the next question again, when price comes back to the area, you want to ask yourself, is there an MSU into this level or an MSU away from it? So now let's see. We have this level, then we have this level right here. Price took the low right here. You have this, you have this, you have this. The price came back all the way, last low before the main low, taps, taps. Is there an induction of this low? I would like to see that, but no, that did not happen. So one of the very good places I've taken this trade from is this induction. Take this trade from this level. And what would be our stop? Our stop would be way below this engulfing, right? Because this is our flipped zone. This is our flipped EG. This is our flipped EG area. Okay. That's our flipped EG area. And what will be our first target? Again, without any iota of doubt, this will be our first target. This I will be our first target. So if you're targeting this I first, okay, send 2R. So the next question is, where within this framework is strong enough to reject price? Now, looking at this level, you see that this whole area is unmitigated, okay? Totally unmitigated. And also this area is a strong level, okay? So if I'm taking my first TP here, my next TP, my second TP is going to be around this level, okay? And what happens, again, just keep asking the question, is this level strong enough to reject price? And this is all based on lower time frame shenanigans. And don't forget that by the time we start to implement everything we spoke about storyline, everything we spoke about storyline, about direction, about the static and dynamic storyline, about structure, all of these things now start to make sense. We'll be able to put one or two together and we'll be able to talk about the playbook more extensively, which is why based off everything we've done, number one, do a quick recap. There's no recommendation to start to trade demo or anything. It's usually best to get your props just right away and start trading as much as you understood or you understand rather everything that has been said so far. So we have different entries, different exit points. For the exit, like I mentioned, structural liquidity, classic scenario levels, the next high or the next low, and then the next strong levels. And when price gets to a level, you want to ask good questions. Is there an MSU into this level? Okay, is there an M5 engulfing forming around this level? Is there an M5 engulfing field that I can trade from? And if you're lucky to have gotten to the level after there's MSU away from the level, then that means you have gold in your hands, and then you can trade comfortably from that level. And if by adventure you started by making your analysis on lower time frame, M30, M15, M5, remember to always work your way back. When you've gotten your entry types, it could be an EFG setup, it could be an MSU entry, whatever entry you got on the lower time frame, always ensure you corroborate that entry with an H1 or H4 level. And then that way you can start both from higher time frame to lower time frame or from lower time frame to higher time frame, but always ensure that the higher time frame intent is within the premise of what you intend to trade, because that determines your target. That determines how far you want to hold the trade and how far you want to do. So I'll be dropping more information about the playbook, but for the playbook, really, okay, let me stop recording. For the playbook, really, the playbook is